That's right, you saw it. Last month, FHA came out and gave the green light for a 40-year mortgage. Now, this is a different mortgage than your standard 30-year mortgage. There's a couple things that will be different about it. The first thing that is different about the FHA 40-year mortgage is that it's mostly just a hardship mortgage. So you already have to own a FHA 30-year mortgage and have to prove that you're in some sort of hardship where you can't make the 30-year payments anymore. And so what they do is that they extend you to a 40-year payment where it drops the payments, by about this much. So I don't really see that it's gonna really help a lot of people, but there are 40-year mortgages out there that are not FHA. They have been around. They're very elusive in a way, is that most people don't know about them. It's hard to find them, and if you do find them, you're probably gonna pay a pretty high premium on your interest rate as well for it. But there's also another catch to it, is that these are not they're not qualified loans. So in other words, the CFPB, which creates the lending guidelines and rules for qualifying loans, will only let you do a max of 30 years. So if you do find a 40-year one, then it's not a qualified loan, which means that they can charge you quite a bit of a higher interest rate because the CFPB is out there to make sure that they protect the consumer. And all of this came about from the 2007 to 2009 crisis that we had. And so new regulations came out to protect the consumer, and this is one of the things. But if you're able to get a 40-year note on something that is similar to the interest rate of a 30-year note, then there might be some good news for you. So hypothetically, let's go ahead and let's go break down some numbers and find out what that actually looks like, because it could be a game changer, especially if you're an investor. So let's go check it out. All right, so hypothetically, if you were able to get somewhere close to the interest rate of a 30-year mortgage on a 40-year mortgage, for an investor that would be a tremendous win, because you would have smaller payments for longer duration, which means that you'd actually have more cash flow if you're renting your property out. But let's break it down and kind of show you what I'm talking about here. So the first thing we're going to do is a 30-year typical mortgage. And we're going to say a purchase price of $400,000 at 10% down at a 6.5% interest rate. All right, so based off of the 28% front end ratio, which is what mortgage lenders use to determine whether or not you qualify for the total amount of the loan or not. So what this is going to do is just break down what you're able to afford month to month, and it's going to be an overall number based off of what you make yearly. So off that 28%, so your monthly payment on $400,000 based off that 28% is going to be $3,793 monthly, which equivalates to that you have to bring home $13,546 a month, which is $162,557 a year. So to qualify for a $400,000 loan at 10% down with a 6.5% interest rate for 30 years, you'd be looking at having to make $162,000 a year to get that qualification based off of this 28% front end ratio here. All right, so let's go to a 40-year and I'll show you the difference here of why a investor would like it if they could find it with a similar interest rate. So on a 40-year, you're going to be looking at $3,625 a month, which equals, that means that you would have to be making $12,946 a month, which that equates to a little bit over $155,000 a year. And then for a comparison, we'll go with a 15-year as well, since that's another typical option is a 15-year note. And now this one's going to be a little bit outrageous. So your payment's going to be a little over $4,500, $4,593 a month will be your payments, which means that you would have to make $16,403 a year. A month, which that one sits right underneath $200,000 a year, $196,842. Okay, so those are going to be your three different ones. And the main one that we're talking about here is going to be the 40-year note. Now, like I said before, FHA does not offer a 40-year note. They offer what they call a restructuring of your 30-year FHA. So you can extend that out, but you have to show hardship. So you won't get this through FHA. You'll get this through some other company that does offer it as a product. But once again, trying to find it at this interest rate where all of this makes sense might be a little difficult. So you might have to do a lot of digging. But you can see why an investor would actually enjoy having this, because you're paying $37.93 on a 30-year. On a 40-year, paying $36.25, which leaves a better gap for you to make more income, more cash flow, because that's what you want whenever you're renting out property. You're not really worried about the overall, if this costed you an extra $180,000 more to pay than this 30-year one. You really don't care about that, because what you want is cash flow, because you will sell that property before you keep it for the full 40 years anyways. You're going to make some cash flow, and then you're going to sell your property. So you're not necessarily worried about how much more that you're typically going to pay if you carry it for the full 40 years. So hopefully that will help y'all out on understanding that there are a couple different things with the 40-year mortgage. I've been seeing a lot of different videos on there, and a lot of people are kind of like advertising it this way, that you can just go out there and get it like that. I have not been able to find one that's very easy that really gives you a 6.5% interest rate. If you do know of one, please send it to me so that way I can start utilizing it. But other than that, the only way that you're getting a 40-year note is going to be through the FHA program that just came out back in March. I think it was March 9th whenever it got approved. So if you could please hit the like and subscribe button, help out the channel, help out the algorithm, so that way I can keep doing the content like this, and that way you can keep getting valuable information. All right, until next time.